You're watching Masters in Trading Live with Jonathan Rose.
Hey everybody, Jonathan Rose. Today we're going to go over 5 reasons why you want to be long uranium for the next 3 years. The market is moving a bunch this morning. Lots of tariff news, so the market is a little heavy trading off. We're going to go over uranium, but we're also going to go over some of our top holdings, including Lyft, ticker LYFT, and of course, QuickXO, QXO. In the last 2 weeks, I have videos out on uranium, QXO, and Lyft. We are just going to continue the conversation today. I got the chat open. Thank you guys very much for joining. Guys, my name is Jonathan Rose. Every day the market's open, 11 a.m. Eastern time. I get on here, share some thoughts once in a while. We'll share our trade of the day. So I got the chat open. I'll keep it up throughout the presentation. And let's move over to the screens and let's have some fun. Here we go. Okie dokie. Couple names I want to start off with before we get into the 5 reasons why you want to own uranium. We have a stock, QXO. Brad Jacobs is the CEO of QXO. We think Brad Jacobs is going to consolidate the entire building industry. This morning, QXO shares are trading higher after Morgan Stanley initiated coverage on the stock with an overweight rating and announced a $35 price target. Not bad. Our price target is $40 plus. Last week, Barron's ran a one-pager, their price target above 45 as well. Here is QXO. We've been long since $16. I am extremely bullish QXO. I almost said that I'm uber bullish, but I don't want to confuse anybody because the next name we're going to talk about is Lyft. Speaking of Lyft, I'm uber bullish on Lyft. Not so much on Uber, but I am on Lyft. This morning in our Discord, guys, it feels like there might be news in Lyft. Lyft traded down to $15.50 this morning, $16.50 last. What timing? Wade just added this morning. Well, as I looked, there is a huge offering in Lyft. Lyft, $450 million convertible offering. They are doing that to buy stock. They're doing that to invest in the infrastructure. We are long and strong Lyft. If you aren't aware of the reasons why we're long Lyft, please, on the YouTube channel, just search Lyft, LYFT. You guys long QuickXO? You guys long Lyft? I love it. Keep it rolling, guys. Keep it rolling. Even this market, when things are kind of off a little bit this morning, 2 of our names making really nice moves. Where are they trading right now? Let's check them out before we head over to uranium land. Lyft, last trade right here, $16.50. It traded down to $15.50 earlier today. And then QXO. QXO, we got a price target, guys, of over 40. Here's what QXO looks like. It's pulled back a few times. Here, they were raising money. That's why it pulled back. Here, they were raising money. That's why it pulled back. Lyft is raising money. It didn't pull back. It's actually rallying. Long and strong QXO, long and strong Lyft. Keep those rolling. All right. Okay, to start the year, we put out 5 uranium stocks to watch. Very, very popular video. We're going to go over some of those stocks right now. But, no, I don't want to start this video. Sorry. So here we go, guys. I put together 5 reasons to be long uranium for the next 3 years. This is the price of cash uranium. Okay? Uranium, last trade, $76. Uranium's been nice and strong. In the beginning of the year, March, it dipped down to under 65, but uranium right now is strong like bull. Now remember, this is the cash price of the yellow cake. This is not a company. This is the actual value of uranium. 5 reasons. Number 1, chronic supply shortage. New mines require much higher prices to start. 2, demand for uranium is exploding. We're seeing that in reactor restarts, SMRs, and AI-powered buildouts. The main SMR companies, single module reactors. You want to see how strong these are? LEU. That is a single module reactor. LEU, we've been talking about this company since it was like under 20. LEU, small module reactor. The other name, SMR. Small module reactor. Same thing. Look at the returns over the last couple of years. So demand is exploding, reactor restarts. SMRs and AI power buildouts. We're seeing that in those other stocks. Great trade, 69% in UEC this year alone. All 5 of those stocks are just flying higher that we shared. Fuel cycle choke points persist. Conversion and enrichment capacity still scarce. The problem is enriching this stuff. It's dangerous. It takes a lot of money, and so that demand is really increasing. Policy and energy security tailwinds for sure, especially in the US. Governments are backing nuclear expansion. And then finally, own the torque. The miners and the royalties can outperform rising uranium. Again, miners and royalty companies can outperform rising uranium. Here's what it looks like. Here's 4 uranium companies. Now, if I get this a little bit bigger, they're all right by their expected move. Here's the 4 U's up here by its expected move. LEU is kind of in the middle of its expected move. URA is high on this expected move. DNN, I really like uranium royalty companies. Companies that get a royalty every time people are trading in uranium. So those are companies to search for. Uranium royal companies. One of my favorite, UROY. In our all access, we do not have an options position because options are really, really difficult to trade on stocks that are under $5, but we have been long UROI since under $3. UROI is a uranium royalty company that we really, really like going forward. Before I hop off, guys, I want to jump in with some more market commentary because right now risks are elevated across the market. So here's exactly what I'm watching. Here's a chart I've been showing you for a little bit. This chart shows the NASDAQ relative to small caps. So going back all the way to this line here, this is NASDAQ strengthening up relative to Russell. Finally, it looks like the dams broke a little bit. Why is this pulling back? Well, the reason this is pulling back is the market is expecting rates to go lower, and with that, small caps to go higher. So that's why, as the confirmation of lowering rates comes through the CME Fed Watch, this is selling off because Russell IWM is strengthening up relative to QQQs. Here's what you got to watch out for. And I think this is the number one thing that you should be looking at in the market today, to determine whether the stock market in general is going to be trading higher or lower. And what that is, it's the VIX of the VIX. The VIX of the VIX. You can pull up, I'll put right under me here. This is without a doubt the number one thing to watch for today. If I can find it. Here you go. VVIX. Here's what VVIX is. It's the VIX of the VIX. You can see it gapped up over the 100 and 200 period moving averages. Will it have sustained trade up here? That's going to be your number one question. VVIX is trading at 107.83 last. I want you to pick one number, let's say 112. Anything under 112 in the VVIX is going to be bullish, the overall market. That's right. Anything under 110, 112 VVIX is actually going to be bullish. If the VVIX continues to rally above 110 or 112, that's when you can switch to bearish and have more confidence in this move, in this downward move in the overall market. That's what we're going to be looking at. Denny, nice trade in UROY. Okay, guys, so what I always do now is I jump off into our all access group. And our all access group, that's where we go over all of our open positions. Guys, thank you so much for hanging out with me. I'm going to be live tomorrow, 11 a.m. Eastern time. Join us, give a thumbs up, subscribe. I'll see you guys live tomorrow. What's up, guys? And we're back.